Hi everyone, Emily here. Today we've got a really interesting story. A company called Ouster, ticker OUST, that may just be one of the key players in what I like to call the physical AI era. What does that mean? It means machines, infrastructure, and robots not just running software in the cloud, but seeing, sensing, and acting in the real world. And Ouster is supplying the eyes for many of those systems. So, let's dive in. What Ouster does, why it might matter, what the risks are, and whether it might be a play worth watching. First, who is Ouster? Ouster Inc. is a US-based company headquartered in San Francisco. Their business, they develop and manufacture high-resolution digital LiDAR sensors and the software that goes with them for vehicles, robots, smart infrastructure, industrial machines. Key product line, sensors such as OS0/OS1/OS2 and a perception platform, Gemini, for infrastructure applications. Their mission, enable machines to see and understand their surroundings, safety, automation, smart cities. Why is that important? Because in any future system where a machine moves through the real world, robot, self-driving car, drone, automated industrial vehicle, it needs sensors, vision, LiDAR, etc. Ouster is in that space. What is physical AI? It's AI plus physical world. So instead of just data crunching in a server, you have machines interacting with the environment, sensing, understanding, acting. I found a good piece summarizing every moving machine will eventually require LiDAR to provide them eyesight. That means sensors plus perception software plus decision logic plus actuators. The first step is seeing the world reliably. Where Ouster comes in, Ouster supplies the sensor plus perception stack for exactly that seeing the world part. Their website claims their sensors power automation for everything. Recent news, Ouster got a US defense approval for their OS1 LiDAR under the Blue UAS framework. Market opportunity. The industrial LiDAR market is increasingly seen as a multi-billion-dollar arena. For example, is Ouster well poised to capture the $18 billion industrial LiDAR market? So, in simple terms, if you believe the physical AI trend, robots, smart infrastructure, autonomous machines is real and growing, then a company with core sensor/vision tech like Ouster could benefit. Let's talk about revenue, growth, and where Ouster stands. Ouster has shown meaningful revenue growth. In Q2 2025, they increased revenue approximately 30% year-on-year, shipped a record approximately 5,500 sensors. Their product breadth, they cover automotive, robotics, smart infrastructure, defense. Diversification is a plus. They merged with competitor Velodyne LiDAR in February 2023, consolidating technology and market presence. They emphasize digital LiDAR rather than legacy mechanical LiDAR, which may be a competitive edge. Of course, no company is risk-free. Here are what I see as the key issues for Ouster. Profitability. They are not yet consistently profitable. High growth, but still cash burning. Competitive pressure. LiDAR is a hot space. Many players, lots of hype. Costs must come down, performance must improve. Integration and scale. Having a sensor is one thing. Getting broad adoption in autonomous vehicles, infrastructure, robotics is another. Adoption can be slow, regulation and reliability matter. Cyclicality, dependence on clients. A lot depends on major customers, vehicles, infrastructure projects, and they often have long sales cycles. Valuation and execution risk. For investors, the promise is big, but execution must follow. If they miss adoption or costs stay high, the investment could underperform. Here's my personal take. I believe Ouster is well positioned for the physical AI wave. Their sensor-centric business is foundational, but the value is in how fast and how well they turn sensor sales into recurring business, scale, and margin improvement. If you're considering this as an investment, I'd watch for these key signals. Customer wins in industrial infrastructure, often less hype, but more reliable. Margin improvement in sensors and software means costs coming down. Recurring revenue or software/analytics added onto hardware sales. Clear roadmap to profitability or cash flow positive. In short, this is a growth and speculative play rather than a safe dividend gem. If you believe in automation plus physical AI, this has upside. If you're more conservative, the risks may be high.